What is a stock lockout period? Sometimes referred to lockout, lock in, lock up period in stocks. This is very important, especially when it pertains to IPOs. So in this video, I'm going to tell you exactly what it is and exactly how it affects stocks and their prices real world. Once again, ladies and gentlemen, boys and girls and children of all ages, you are now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And also, check out the description box to support our other platforms. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. The lock in, the lock out, the lock up period. What is that? So we're looking at this company for prime example called CrowdStrike. It IPO'd a couple months ago. I want to say 3 or 4 months ago. The company IPO'd, and after the company IPO'd, the company ran up to $110 after it IPO'd. Now to think about it, on Friday it had its earnings report come out. Strong earnings, but the stock dropped because of the lockup period. Now what does this mean? What does that mean, right? So we're going to look here, a report from Market Watch, because the stock had great earnings, but it dropped 3% because of the lockup period. So it's very wise to know what is the lockup period. So right here, CrowdStrike business looks strong, but lockup expiration looms over stock short term. On Monday, 183 million more shares are eligible to sell, right? So CrowdStrike, they had great earnings, but the lockup period. So what the lockup period is? The lockup period is when, let's say, a company like Airbnb is going to go public next year, right? So right now, it's probably issuing stocks to some of its current employees, some of its executives, officers, or whatever, right? These are private stocks. These are stocks that people are selling maybe for $1 or $2 before the company even go public. So now, when the company goes public next year, let's say if the stock comes in at 60 bucks. The people that had it before, they cannot sell right away. They are put into a lockup, a lock-in, or a lockout period, and it has an expiration date. It says, hey, when this stock goes public, you cannot sell until 90 days or 180 days after the stock has been on the market. So what happened with CrowdStrike on Monday, even though it had great earnings on Friday, everybody knew on Monday the lockup period was going to expire, meaning that all those people who got in early before the IPO would now have the ability to sell their shares. That put fear into the market that, hey, everybody will sell their shares, and when people sell their shares, the stock will fall, right? So why do they have lockup periods? The reason why is for that reason. Primarily, is that when a company goes public, someone who bought a shares for $2 and now the company's trading for 80, they will sell, or most of them will sell right away. And when the company IPOs, comes to the market, and a bunch of people start selling right away, it drives the price down dramatically. So what they do is the investment bankers want them to hold it for a while to create, to not put the pressure of selling and flooding the market with extra shares. But the insiders, they want to sell right away. Obviously it's their lottery ticket in a lot of cases if the IPO does very well. So pay attention to lockup periods and lockout periods or lock-in periods. They're very important because after Airbnb has an IPO, there will be a lockout expiration date. It will be a date that insiders can sell their stock. And that brings fear to the market because they're like, whoa, what are those insiders going to do? Are they going to start selling? Or, are they going to get rid of their shares? So this is why a company is down. How you can take advantage of this is right now, the company has great value, but it has very low, it has fear in it. So fear dropped the stock about 3%. It's down to about $49, this particular stock now. And you can find opportunities to where you can go in and grab some when people get a little fear, or you can purchase a call option on it, because after the lockout period goes on and the next earning report comes out, everybody will forget about the lockout period, the fear will go away, and it probably will shoot up. So anyway, that is what a lockout period is. That's how it pertains to investing, and that's how you can take advantage of it. Until the next video, podcast, cartoon, or whatever else you see me do crazy around the globe, peace, be safe, I'm out. Thank you.
Check out the latest installment of the multi-book series teaching kids about financial literacy. Wesley learns about insurance. Guest starring Broncos Hall of Fame running back Terrell Davis. Authored by Prince Dykes. Teaching kids the real-life skill sets that matter as they grow older. The third book in the Father-Son Financial Literacy series gives a kid-friendly introduction into the world of insurance. Award-winning and recently stamped by Warren Buffett. Available hardcover, paperback, ebook, and audio online at Amazon, iTunes, Audible, Barnes & Noble, Walmart.com, Tattered Books, and more. Hardcovers are only available at Lulu.com. Presented by Alpha One Tax and Wealth and Belco Credit Union.